Hello. Welcome back, everybody. And we are talking today about the jobs report. This is going to be one of the biggest things that's happened this week in terms of the crypto market. So we could see either a massive pump or a massive dump. So we have a couple different scenarios. AJ, I know you mentioned one or two of the scenarios in your previous videos as to what we might be looking for in terms of the movement that we could see. Is that right?
Yeah, definitely. As people are aware, if they've been watching my past three live streams, I am in a current short position, and depending on what the data that comes out today is going to depend whether I keep this short position open or we close that short position. So we've got that unemployment rate, and the forecast is 3.7. If it comes in lower, then we are going to be expecting the price of Bitcoin to pull back. And if we see it's coming higher, then we are expecting the price of Bitcoin to push up. So if it comes lower than expected, so lower than 3.7, I'm going to hold that short position open. But if it comes in higher, I will most likely close that short position because we would potentially see a push towards the upside in the markets. But I know Ben is going to add on a little bit to that as well.
Yes, I absolutely am. So one thing I will show you is obviously we're looking, well, whatever happens today is going to have an effect both on the traditional market and also on the crypto market as well. So I'm just
Yeah.
going to bring this up here. One thing to look at from the traditional markets, we are seeing US yields jump on a 10th successive week for the first time since 1984. So that's not great. Obviously, around 1980s, there was some pretty crazy things going on, and the economy was pretty much down the toilet. But so this is not necessarily a good thing, and we can look at the yields. In fact, AJ, should we have a quick look at the yields, maybe the 10-year bond yield, and then also
Yeah.
we can have a look at what that's done over the past few months and what Bitcoin has done in response to these yields, because these are very much correlated, unfortunately. Because as people move away from the likes of Bitcoin, which is a bit more risky, they move into these safer assets such as US bonds.
Yeah, definitely. So over the course of 2022, we have seen a massive push towards the upside for the bond yields. And as we can see here, we were in this very nice channel, continuing that push towards the upside. We came all the way up to 4%, which we haven't seen the bond yield this high in a very long time. I don't know if this chart even shows that. Is it highest on
That's
record?
a
Is that
19. No, this is
highest on?
just a continuous 10th
Yeah.
week continuous, and that hasn't happened since 1980, where we've had 10 straight weeks of just like increase in the yield.
Okay, yeah. And, as you can see here, it looks as though the yield still wants to push towards the upside. We're still getting these big green candles towards the upside. And if we look on the shorter time frame, we could potentially have been forming some sort of bull flag pattern here. If we draw something like this, we could be looking at some sort of bull flag formation forming here that broke towards the upside, and that's why we are getting this push towards the upside. But yeah, initially over the course of 2022, the bond yield has been pushing towards the upside, and as we know, Bitcoin over the course of 2022 has been moving towards the downside. So we can see it's very inversely correlated there.
Yeah, it is. And so obviously, guys, we're all here for the same reason. We want to know what the heck is going on with the non-farm payroll numbers that are going to come out from the US. Also, we get an unemployment rate from Canada. Again, it's not a massive market, but it's one to consider. I would have potentially looked at Canada as like a bit of an indicator to tell us what's happening with the US, but I don't need to because they both come out at the same time. So that's a bit of good news. And so the key things that we're looking at here, guys. So ultimately, we have to remember that the US, I should say the Fed have this target. So this is their median target. Unemployment, look at this. They want this to be 3.8. Currently, we're forecasted to hit 3.7. I think we probably will hit 3.7. The Fed have been generally pretty consistent in terms of forecasting and actually hitting the forecast for the unemployment rate. But that's because as a percentage, there's a lot more leeway. 3% of 300 million people, if they're off by 0.1%, that's a very, still a large amount of number from 300 million people. Where they often get the number wrong, though, is when we see these non-farm payroll numbers. So this basically is outside of the farming sector. how many people have, declared, hey, I don't have a job, and typically if you're out of work for like a week, you might not do that if you've got another job to move into. But so this is just, kind of long-term unemployment. So we're looking at this here. Is that right?
A lot of
Yes,
volatility coming into the market right now.
oh yes, and so we will see this. So this is coming out in 1 minute, basically.
Yeah.
So if we see less numbers, so less jobs added, well, more unemployment is going to mean the stocks and the general market will move higher. So we want more unemployment so that the Fed do less and they don't have to, do a rate hike as aggressively. I will now bring up Bloomberg and we can watch this. Hopefully we get a synchronized I guess like audio, etc. I am on 1 second. uh all
If not, I can always
shows.
play it. It's
uh,
still playing on mine.
are we getting the announcement? So as you can see here, 10 seconds away from the payrolls report. I don't think you guys can hear this, but I'm trying to get the audio from somewhere else. Here we go. Oh,
Okay, so they've come in lower.
coming
Unemployment
in
rate.
lower.
I just share my screen right now. Unemployment rate has actually come in at 3.5. So taking a look at the charts, as expected, we are seeing the sell-off. And if you are aware, I do actually have a short position open here. So that is really good for the short position. And like I said at the start, if it was coming in higher, I would have closed it, but it's coming lower. So I am going to keep this open. But we are going to see a lot of volatility now. It looks like we are seeing a big sell-off. Right now, if we go to the shorter time frame, let's have a look at the 5 minutes. It's a bit more lively on the 5 minute. There we go. So as you can see, previously, before, as we were coming into it, we saw a lot of volatility in this candle right here, and now we are getting a big sell off with a lot of volume as well. So it's not looking good. It looks like that we're still gonna see this push towards the downside, maybe over the next few weeks. And I've been speaking about this as well on the bigger time frames. For me, it's just not looking too bullish, especially with that DXY pushing towards the upside. And now we've come in lower than expected for the unemployment rate. The DXY is now pushing towards the upside as well, which, as we know, DXY goes up, Bitcoin traditional market is going to come down. Taking a look at this as well, I spoke about this in my live stream on the NASDAQ. This is a 1 hour chart. We have this mega fine pattern, this big mega fine pattern here with higher highs and lower lows. And what we can see here is we got rejected from the resistance here. And let's just show you an example here. So this is a bearish mega fine pattern, and it looks as though we could come down and test the bottom of the mega fine pattern, which is all the way down at around maybe $10,000. That's where we could potentially see the price come down to. We also had this triangle pattern with this ascending trend line here that broke towards the downside. So that's another signal telling me that we could see the NASDAQ pull back even further. And then looking at the daily, where is the next level that we're looking at? That is this major support level here at around $11,000. So yeah, I do think we could pull back to that. And that is also actually the price target for the triangle or the rising wedge pattern here. So around 11,000, just under 11,000 is that target. Let's have a look quickly at the S&P. The S&P is obviously going to pull back down to this major support, but what we're all here for is Bitcoin. And of course, we can see a lot of resistance here. So we have the golden pocket, which is playing as resistance from the very bottom of this move here to the top of the range here. And that's coming into perfect confluence with this downtrending resistance line here. So as you can see, this was established on the 31st of May. We tested it to the dollar on the 15th of August. We also tested it pretty much to the dollar on the 13th of September, tested it to the dollar over the course of the last few days. So the 4th, the 5th, and the 6th of October, and we are getting a rejection from those two levels. So there is confluence there for me, and that's why I actually did open up that short position. And if you watched my previous live streams, you will have known why I opened up this short position. And as the unemployment rate came in lower than expected, I am going to keep this short position open because we are going to expect a sell-off due to this.
Yeah. You're absolutely right there. We are. And I'm just going to show you what people are talking about on Bloomberg, for example.
By 204,000, number of unemployed falls by 251.
In some ways, on the margins, not an extraordinary move one way or another, but on the margins, this is exactly what the Fed does not want to see. Because what you're seeing is a shift away from the perfect landing of seeing more people coming into the labor force and creating a bit more slack to potentially loosen some of the price pressures that you're seeing. How would you interpret this using the other data points, as Mayor Mary Daly pointed, because it's a multitude of points, in terms of how much further they are away from their goals?
It's hard to say that they're necessarily far away from their goal, because we did see the JOLTS numbers come down and the number of job openings are falling. And Mary Daly, the San Francisco Fed president, was in here the other day, and she was suggesting that the unemployment rate would trail other indicators because there are a lot of jobs available, even if they have come down. And
okay, guys, I'm just going to pause that there. So I've got the audio from somewhere else, so that's why it's a little bit out of touch, or out of sync, I should say, with the video here. But we saw this earlier on, and I mentioned this a couple of days ago, that we had the ADP jobs report, so the US private sector added 208,000 jobs, and so that was above forecasts, which means we have a stronger employment market. And obviously a stronger employment market means you have less people who are unemployed. So the unemployment rate was going to go down. And so this is really what we probably could have anticipated. And obviously hence why AJ was fantastic in providing us with that short, because we saw data such as this, which gave us that kind of indication that in fact we would have been seeing this movement to the downside. So it just puts a lot of pressure on the Fed, that where previously inflation was, unemployment was going up, which is good for the Fed anyway. And they wanted to go from that 3.7 up to 3.8. Now the Fed has gone, unemployment has gone from 3.7 down to 3.5. So they have to do so much more. And just one thing I want to show you here before we jump back into the charts is I loaded this up just a second ago. I don't know if this is going to have changed, but I will just refresh the page and see if there is any difference since the news has come out about these numbers, because this is going to be the Fed have to almost guaranteed have to do a 75 basis point hike coming up in November. So I'll just refresh this here. Okay, we haven't seen a change. Maybe once the market opens, I'll come back maybe tomorrow or Saturday. We'll do another refresh and see what analysts are saying, because I find it extremely unlikely that analysts believe that we'll have a 50 basis point hike when unemployment is going in the wrong direction, not even plateaued and ready to come down, just completely in the wrong direction. So I think we'll continue to see these indices fall. And obviously, as we mentioned there, luckily, AJ, your short position continue to kind of provide us with, the right direction and a nice little return.
Yeah, definitely. It's always great when the technicals line up with the fundamentals, and this shows how the technicals actually sometimes come in before the fundamental news does as well. I've showed you multiple times all that resistance, all the confluence that was coming in. We had, the golden pocket, we had the resistance from the 31st, and then we also had this horizontal trend line here. And I just seen a comment from Mr. Panda saying, AJ is murdering my portfolio with his shorting again. Just kidding, by the way. Yeah. I don't want to be shorting, but to protect my portfolio, that's what I've got to do, because, I'm not moving the market, of course. I'm just doing whatever the market is doing. So when the market is looking like it wants to come down, I'm going to follow that, and I'm going to short that as well to protect my own portfolio. But I thought that was fun. Nice to see you back here as well, Mr. Panda. As well, do you think today's New York Open will dump us even more? Personally, for me, I don't know what your take is on this, Ben. Once the stock market opens in the US, I do think we are going to see a bigger sell-off within crypto, because I think when the market opens, we are going to see the sell-off in the traditional market, and then that's going to continue to feed into the crypto market as well.
Yeah, no, I absolutely agree. I couldn't. Yeah, that is basically it. And also, one thing to consider, guys, is on top of that, obviously that is the primary reason what AJ's just mentioned. We know the market is getting worse. We know that the Fed are going to be aggressive. There's no Fed pivot, and I mentioned this a couple of days ago, but I was going against the grain, should we say? But in addition to that, it's Friday, so everybody wants to close off their positions. So everyone's going to be closing off any hedges that they had. People have seen a bit of movement to the upside in some traditional markets this week, and we had a bit of a relief rally earlier on in the week, and that's fantastic. But at the end of the day, it hasn't really lasted. Everyone's going to be selling everything, especially because it's the end of the week, and also stop losses and everything would have been hit. And I would imagine a lot of people would have prepared for this yesterday or even earlier today, which is why just before we had the announcement, AJ, we saw lots of volume, didn't we?
We did,
and that's, people preparing. So I think especially as Bitcoin continues to move below certain levels of, let's say support, we're going to automatically have orders triggered, and we're going to have people closing closing out positions just because it's the end of the month, end of the week. Sorry, and you can see we're getting these big spikes down already, and there's not really too much support if we're looking around, especially when you consider the macro picture. So there is not really too much to write home about. So I think we will continue to see the movement down.
So what I was actually looking at was the so I mentioned this a few days ago, this potential bullish scenario, which was this bull flag, which broke towards the upside. But for me, there wasn't volume there, so the confirmation just wasn't there. So I told you why I didn't enter this long position. You could have still entered the long position, and it would have played out fairly well. You would have seen some slight profits, but right now you would be in a loss. But yeah, I mentioned that I didn't open this long position because there was no spike in volume, and a lot of people were getting very, very bullish as well. I'm aware of that, and I'll speak about that in a second. But for me, the support is getting broken right now. So the support that I was looking at was the 0.382 Fibonacci level. As you can see, it's acted as support here. So it's I pulled it from this low here to this high here, and it's acted as support nicely here, and it's acted as support previously here. So this is the support that we're currently at, but it looks as though we are going to lose that support. Now, because we're going to lose that support, we are also going to lose the value area high here from this fixed range that we are in. And as you can see, that's acted as support right here, acted as support before, we've obviously broken down now. But yeah, for me, I do think we are going to come down to the POC, which is a point of control, which is currently sat at around $19,100 approximately. And then, if we come down to there, we're most likely coming down to $18,800. And if we hit that, then for me, the next major support level that I am looking at is the daily level. And this has been very well respected on the likes of the 4-hour, the 8-hour, and the 12-hour. This is a 4-hour, and we respected this daily very, very well. So $18,000 coming in. As we can see right here, let's get rid of the magnet. We can see support, 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 support. This is a daily level, and it's being respected very, very well by on the 4-hour chart. So this is going to be my next major support level. But if we do lose that, then I think we are going to see the price come even lower as well. We're going to see another leg down if we do lose that. But yeah, I do anticipate after this this data has come in lower than expected, I do think we are going to come down and test the value area low now. As you can see from the so from the 14th of September, we have been in this this range here, just sort of trading sideways within this range. And because we have had this bearish fundamental news and we have that bearish technical news as well, I would expect the value area high has already been lost. So now I would expect the price to come down to around the value area low at $18,800. So that's what I'll be looking at. We are going to see a lot of volatility in this area as well. So just be aware of that as well. I did enter this short position a few days ago. For me right now, maybe it would be a little bit too late to enter a short position. I like to get into those short positions as high as possible. I like to try and find the sort of top Obviously, you can never find the top of the range, but it is. I do like to find as close to the top as I can get, and then short that position. And I've gone through it why I entered that short. Just going over it again, we have the resistance from the trend line from the 31st of May, and we have that golden pocket from this big range that we are in on the daily chart as well. That was enough confluence for me to enter the short, and to even add on to that confluence, we had horizontal resistance line here at the 4 hour on the 4 hour chart, and then the DXY is continuing to show me signs that it's going to push towards the upside. So as we can see here, we got 2 consecutive green candles. I did go live very late last night, and I did say it was pretty likely we're going to see 2 consecutive green candles because this green candle right here was so big. That's a confirmation for me now that this is the lower low, the next higher low on the DXY daily chart. I've showed you previously because the confirmations before for the previous higher highs, higher lows, getting muddled up here. Is either a big green candle towards the upside or 2 consecutive green candles. So here we got a big green candle towards the upside. That was a confirmation that it was a next higher low. And then here, 2 consecutive green candles. Here, 2 consecutive green candles. 2 consecutive green candles, 2 consecutive green candles back here. It goes on and on and on. So that was the confirmation for me, 2 consecutive green candles. Now I think the DXY is going to continue to push towards the upside. Obviously, bringing the traditional market and the crypto market down as it goes up. So it's not looking too good. Now, I hate to talk bearish, and I'm pretty sure a lot of people don't like me talking really bearishly, but this is the reality of it. The reality of it is that the DXY is continuing to push. Yes, it's had a pullback, but it's going to continue to push because it's formed a higher low. And the reality of it is Bitcoin is going to pull back. I don't like to bring this news to you, but it is the reality of it, and it is my job to bring that to you as well.
You are right, unfortunately. And one thing I do want to mention, just to kind of add in here, we all know that a couple of days ago, the UN warned the Fed to cool the rate hikes. And this is what gave us, as you see earlier on in this week, this is, I think, part of the reason. I say part because obviously there's a lot more different things that come into this, but part of the reason why we saw the DXY continue to fall earlier on in the week. Now, obviously, people were like, oh, maybe this is going to cause a Fed pivot. So if the Fed stopped raising rates, then the markets can pump. And I think that's what partly fed some of the pump, and also the, like I said, the falling of the DXY. This is now pretty much not going to happen. Well, I'd say almost guaranteed that it's not going to happen. We will continue to see this, jump from 77, keep going up. 75, interesting. But we will continue to see this stay at an extremely high level. And I'm going to come back to this on Monday because I think there's no chance that we're getting a 50 basis point hike.
No.
So
a lot of people are talking about 50 basis point hikes as well. For me, especially with this with the unemployment rate coming out lower, it's going to be 75. That's how I see it. I'm sure that's how you see it as well.
Absolutely. And one other thing, though, that I want to bring into consideration here is, we have to look at whenever we're seeing something that happens, especially if we're looking, fully fundamentally, what is the full knock-on effect? Not just, if it's like in chess, if you move your pawn, you don't just expose one piece, you then allow, you allow your pawn to be able to do something else, or you trap something else. So there's always much more than just one simple cause effect. And so this is what I want to bring to your attention. The UN report argues that poor countries will suffer disproportionately as a result of any imminent recession. And so one thing that we need to be aware of is obviously the dollar is getting extremely strong. So part of this is, if you're a big bank, if you're an insurance company, if you're basically anyone who has lots of money, you're not going to be holding any other currency apart from the dollar because they're all depreciating and they're all in a global recession. Yes, everyone's in a recession. But if you're in a recession and you have a strong currency, it kind of offsets the whole inflation picture a little bit. So if you're holding the pound, why would you? Surely you just sell that as an investor and buy the dollar. So we're going to see more and more of this. Now that we know the Fed is going to continue its 75 basis point hike, we know that inflation is going to come down in the US quicker than anywhere else. So surely this is confirmation that with this jobs report, we are going to see the Fed be very strong. They'll be bringing inflation down quite hard. And so if you're an investor, you want to put your money in the DXY. So you want to be holding dollars, investing into US bonds or US stocks or whatever, but typically it's going to be holding cash initially. So that's going to be the first step. So the DXY will continue to go up, just to add on to what you've mentioned there, AJ. And I think, supplementing the technicals, we also have this other picture of worldwide countries are just going to be like, you know what, I'll just hold the dollar and I will just wait. This is what big investors are going to be doing. So bring that into consideration as well. And I think that paints the picture of a very, very strong dollar and pretty much weak every other currency.
Yeah, I've seen some people online as well talking about, obviously we have a lot of currencies crashing at the moment. And I've seen some people talking online saying, instead of putting their money into the dollar, they're going to be putting their money into crypto, into Bitcoin. For me, I just don't see that happening. And a lot of well-established people out there on social media have actually been saying that as well. And for me, I don't really see that. I don't see why people would be looking to get into crypto instead of the dollar right now, because we are still very correlated to the stock market. So for me, crypto is still a very risky asset for a lot of people who are unaware of it. And we are going to stay very correlated to the traditional markets, probably for a number of years, until we can obviously get uncorrelated from it. But yeah, I do think investors are going to be getting into that dollar and continuing to push the DXY.
Oh yeah. To I think to kind of counter that, I think that a lot of when you say, and I know the likes of people who you're talking about, the crypto influencers, everyone's going to be buying Bitcoin, that is not true, but it's clickbait, I would say. I don't think, unfortunately, I think it's good. I want anybody who does, genuinely believe this to have, to tell us, because I think it's a really good point to be able to discuss.
Definitely,
I think it's a safer bet long term, but at the end of the day, it's going to depreciate faster. You look at all of the money, look at the market cap just of gold, and that's one commodity. That's $10 trillion. And Bitcoin's 1 trillion. Think about the bond market. That's hundreds of trillions of dollars. I don't even know how much exactly, but it's so much money. There's such a vast amount of money in fiat, and so realistically, I think that's a lot of clickbait. Adding on, because I agree with you. I don't think that people are going to be moving into crypto. Crypto is an extremely risky asset. I mean, that's why I love it. I love it because it's risky. No one really knows about it. Super low market cap, compared to other financial markets. And there's a huge amount of potential for us to make money. And that's why we love it. But it's not an alternative to bonds, for example. It's just
definitely not. No, I agree with what they're saying, but I don't agree with the time frame that they're saying it. So I don't think it's the right thing to be saying now. Maybe in a few years, yes, but right now, for me, it's a bit absurd why they're saying it.
There's an inverse correlation,
clickbait, but it's the thing is that they're saying it actually within the content on the live streams and stuff. And I'm listening to it. That's just not what's going to happen. Bitcoin isn't.
It's only gone down for the past 10 months. It's only gone down, and the signs are there. If you look at the traditional markets, you can see that Bitcoin will continue to go down. So telling everyone, actually, everyone's going to be buying Bitcoin, well, not within the next, week or two, which is what you're saying, and that's where it's, we're sorry that we have to tell you this, like AJ said, but.
It is the reality of it, and of course we have to bring you the facts and the truths. We don't want to bring you bullshit. So yeah.
And I think your screen is unfortunately telling us a very solid picture. And this is exactly what we've just mentioned, But we are going to see the market is waking up. The market's like, right, the Fed are going to be very aggressive. There's no pivot. There's no salvation, probably until middle of November, early November, where they do begin to pivot and go from that 75 to a 50 basis point hike. So that is when we might see a bit of a pump. But until then, we've got a month. But it's just easier to say October and get loads of likes, isn't it?
It is, It's probably a lot of clickbait going on out there.
Yeah. Well, look, let's give that a go. So everyone, like the video, and October, Bitcoin will go to 100K within two minutes. This is just a fake out. It's a fake out from 69,000 down to down to what price are we? Like 20K, 19?
19,500.
Where are we now? Yeah, exactly. It's just a fake out, mate. Just a fake out from December.
Yeah. Anyway, guys, make sure you smash that like button, as Ben said. You know, it really does help the channel out, and we do really appreciate it. It is free as well. And yeah, I hope you enjoyed this live stream.
Yes, very much so. Guys, always use protection whenever you're trading and in life. And we look forward to seeing you tomorrow. Take care.
Thank you very much for watching. See you later.